To remain updated with the latest business news, click on the bell icon.
The Indian stock market has been riding on Russia-Ukraine crisis, Fed's taper view and several other triggers, of course. At such a time, how smartly can one adopt a balanced portfolio approach and earn decent returns in the stock markets? To know the right strategy, keep sending in your queries to us at the numbers flashing on your screens, and we will answer a select few on television and online every Wednesday. So here's the question. Let's begin and take some of those queries coming in from viewers. Our first question today is from Chaman Suri, New Delhi, Minetree. Let's cut across.
Hello, Udayan. Following you for last 4 decades, I hold some shares of Minetree at 41.20. Considering they will do good as other IT company under L&T stables are doing. What are the prospects? Should I continue holding or add more or switch to some other IT company? Please advise.
Well, Minetree is a good company. I mean, there's no problem with it at all. The problem is that valuations had actually run up quite significantly for not just Minetree, but most other top-line mid-cap companies in the IT space. And I think the correction that we saw from their tops, I mean, Minetree too went up to almost 5,000 and then pulled back to 3,500. And off late, it's come back to around your entry price of around 41, 4,200. So some valuation correction has happened. It was overdue. But the company is good, growth is strong, the management is excellent, and they have really quite significant clients in the travel and tourism and hospitality space particularly. So I don't think there is any major issue with Minetree. Once valuations have got digested and growth takes care of some of those lofty PE multiples, because Minetree even today trades at about 35, 36 PE multiple, which is not cheap for the kind of 20% growth that is expected from them. But so no arguments with the company. In fact, one could say the same of some of the other mid-cap names that you mentioned. I mean, whether you look at L&T Technology Services, Tech Mahindra, Coforge, Tata Elxsi, I mean, I think they're all on a good wicket. Demand is strong. So I would say that there is no problem with holding on to something like a Minetree in the longer term, as long as you can live with some near-term volatility because of the valuation expansion.
All right, here we have A.L. Kishore joining us from Hyderabad. He has a question on Grindwell Norton. Let's hear it.
Hello, Udayan. My question is about Grindwell Norton. With an investment horizon of minimum 1 year, what is your take on the stock?
I would say that for a company like Grindwell Norton, which is a very good company, but you probably need to expand the horizon a little bit. Because, you know, the stock has doubled in the last 1 year. I mean, of course, it's corrected 10% from the peak of 2000, but, you know, it's still almost a doubler. So given that valuations are now trading at 50 plus PE multiple, you could see some period of consolidation in the company because the gains are behind it and there is a lot of turbulence in the overall market scenario right now. But it's a good company. It's a solid management. Growth is excellent. They have such a dominant position in the abrasives and ceramic space. And given that demand is quite robust from both the industrial and the automotive front, I think Grindwell is a good company for the longer term. So I don't know about the next 1 year because the market situation is such, it's very difficult to make any kind of predictions or expectations for the next 12 months, particularly for a stock which has done so well in the recent past and is quite expensive on all parameters. So if you're the long-term investor kind, I would say with a horizon of 3 to 5 years, then Grindwell Norton is certainly a company worth looking at. Just in the near term, from these lofty valuations, it might be up and down. I don't think you will make a lot of money in the next 1 year from it, but in the longer term, you just may.
All right, and then we have G. Vaidya joining us from Mumbai, who has a question on Info Edge.
Hi, I hold 200 Info Edge, purchased at 6,800 rupees. Now the stock has fallen to 4,400. Can you suggest?
No, the problem with Info Edge is that, yes, you're right. I mean, it's corrected quite a bit. You brought towards the top end of the price because it went up to even 7,500 and fell back to 4,500. I think from a stock perspective, it is linked fairly or unfairly to how some of these new age digital stocks, these new IPOs are doing. because InfoHedge owns, as you know, some shares and significant stakes in Zomato and Policy Bazaar. And when these stocks don't do well, inevitably it has some rub-off on the InfoEdge counter. And this may well continue till these digital stocks find their feet and start moving up once again. I don't think you will see meaningful outperformance or anywhere near the price that you bought it at for InfoEdge. However, its core businesses are strong. Naukri.com is a dominant player in the recruitment space. And given how the dynamics are of the recruitment space now, with high attrition levels for most IT companies and relentless hiring from them, I think they're in a good space. And Naukri is indeed the bread and butter of InfoEdge. Even their property vertical, real estate vertical, 99 acres is doing quite well. Not as profitable as Naukri, but it's doing well. So I think there's no issue with growth or the core businesses of InfoEdge. But as I said, I mean, till the Zomatos and the Policy Bazaars of the world start performing again, I don't think your stock will get back to 6,800 where you bought it at.
All right, Kunal Gaurav, our next question coming in from Muzaffarpur wants to ask a question on IDFC First Bank.
Hello, Mr. Udayan. My question is regarding IDFC First. It is lagging while Bank Nifty is going up every day. Please give your views on it.
No, I don't think the Bank Nifty is going up every day. It's recovered from the bottom, but it's still a bit of a struggle for the banks overall because I think the market's slowly realizing that it will probably not lead the next leg for the market. The interest rate scenario and the inflation scenario is a little tricky at this point in time. Also, this war situation is such, and the sector is very overowned still. I mean, lots of investors own bank stocks up to their necks, and therefore there is no great demand which is coming in for that space, which has underperformed over the last 1 year. I think IDFC First Bank is a decent bank, but at this valuation of 1.5 times book, you can find a lot of comparable companies to buy, and therefore there is no impulse as such for the stock to do well. You would have noted that the stock's down 30% in the last 1 year, and I think now from here on it will perform in line with the Bank Nifty. But there are some issues with their MFI portfolio which might crimp growth or their performance going forward as well in the next 1 year or so. So it's a decent management, and in the longer term you should be okay. But I cannot say that in the near term it will either outperform the Bank Nifty or actually reap any great rewards for you in the next 6 to 12 months.
All right, thank you for those questions, and thank you, Udayan, for clarifying them. Of course, you do know this is the right place to be. If you want to know the right strategy, keep sending your questions to know more on the numbers flashing on your screens. All right, for now, thank you very much for watching.
If you like the video, do like, comment, share and subscribe.